foreign markets. Fair value and volume. In Asia, 6 out of 11 markets closed lower. Shanghai Comp minus 0.40%, minus 0.56%, 0.06%. In Europe, 9 out of 13 markets are trading higher. 0.30%, 0.75%, 0.13%. Fair value. Today's economic calendar. Today's economic calendar includes durable goods orders 8:30 a.m. Eastern Time. Jerome Powell speaks 9:20 a.m. Eastern Time. Consumer sentiment 10 a.m. Eastern Time. Charles Evans speaks 11:45 a.m. Eastern Time. Raphael Bostic speaks 11:45 a.m. Eastern Time. Robert Kaplan speaks 11:45 a.m. Eastern Time. And the Baker Hughes rig count 1 p.m. Eastern Time. Japan's Nikkei fell minus 1.1%, and the was up by 0.2%. On Globex, the ESM 18 CME had an overnight trading range of 2,720.25 to 2,733.25. The first print of the 8:30 futures open was 2,727.25, down minus 3.50 hands. After the open, the S traded up to 2,730.50 and then started to pull back to 2,727.00. At around 8:45 a headline hit the tape saying, President Trump cancels North Korea summit, and by 10 o'clock the S had traded down to 2,705.75, a 25-handle drop, and just 5 ticks above Wednesday's Globex low at 2,704.50. Once the low was in and the selling dried up, the S traded all the way back up to 2,729.00 going into 1:30 Central Time. The futures then pulled back down to the 2,723.00 area as the early MIMs started to show over $300 million to sell. When the MIM went from $467 million to sell to $739 million to sell, the S traded up to a new late afternoon high at 2,729.50. On the 2:45 cash imbalance reveal, the S traded 2,726.75 as the MIM dropped to sell $1.1 billion, that's over $3 billion sold in the last 3 sessions. The futures then traded 2,727.00 on the 3 o'clock cash close, and went on to settle at 2,727.25 on the 3:15 futures close, down minus 2.75 handles, or minus 0.10% on the day. In the end, the S had another decent sell-off, and recovered nicely. The other thing is it didn't break 2,700.00. The big thing on the horizon is the story below. Like I said the other day, the era of free money is over. Companies paying up from the Wall Street Journal. Companies are having to pay up to borrow. One more sign that the easy money post-crisis years are coming to a close. Top-rated corporate bonds were trading this week at 1.14 percentage points above comparable U.S. Treasuries, according to Bank of America Merrill Lynch, NYSE smiley face, index data. While that's still quite low by historical standards, it's well higher than the recent low of 0.91 point in January. Wider spreads and higher Treasury yields are pushing up the cost of borrowing for companies. The yield on BBB-rated corporate bonds, one approximation for the cost of selling that type of debt, was at the highest in more than 2 years recently at about 4.4%. Higher borrowing costs for companies show how market conditions are starting to tighten as the Federal Reserve lifts rates, pulling back after years of easy money policies. The central bank is expected to lift rates for the second time this year in June, and analysts and traders believe 1 or 2 more increases are in store later in 2018. To be sure, the corporate bond market remains quite healthy at the moment. For example, Additionally, companies reported the best 3 months for earnings in years during the first quarter, another sign of corporate health as large firms benefit from an improving economy and a tax code overhaul. But tightening financial conditions inject another dose of uncertainty into the financial markets. Substantially wider credit spreads could add resistance to a further rise in the stock market, some analysts say. Already, rising yields are hitting bondholders. The iShares iBoxx Dollar Investment Grade Corporate Bond Exchange Traded Fund, the largest ETF tracking the space, is down 5.6% this year, far underperforming the S&P. Disclaimer: trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Any decision to purchase or sell as a result of the opinions expressed in the forum will be the full responsibility of the persons authorizing such transactions. Be advised to always use protective stop losses and allow for slippage to manage your trade, as an investor could lose all or more than their initial investment. Past performance is not indicative of future results. Original post.